Hey guys, what's up? David again here with InvestQ. I know BBAI is a hot topic and it's what we're going to be discussing in today's video. And it's a hot topic in the mainstream media. And you might be asking why it is that someone like me would be covering the stock, especially when I always clarify that I do not look at stocks for the sake of, that I do not buy stocks for the sake of hype. And that is not something that I like to take into consideration when I add a stock and buy a stock and add it into my portfolio. However, again, we don't care about the opinions of others. What we do is we do our own fundamental analysis, and whether a stock is hyped up or not does not make the decision whether or not we do buy or avoid a stock. So in today's video, I'm going to give you a deep dive analysis into BBAI and what my long-term plans are in regards to this growth stock specifically. Let's get into the video, guys. And first and foremost, I would like to let you know that in regards to the Prophecy AI, I did mention in my last video, it is a very beneficial tool. I use it for my fundamental and technical analysis. It gives you insights, again, not guarantees, but insights into what could occur in the future and the specific reasons as to why it may, about why it has the highest, has a decent probability as to why it would occur in the future. So I just want to give a big shout out to Prophecy AI and to the Stockmates community in general. Shout out to Will Rich and all of them because, again, they've helped me so much in my journey, and this is a great tool for you to use. Now, anyways, in regards to BigBear.ai itself, guys, first off, a disclaimer, I am not a financial advisor, so please make your own educated decisions whenever it is you do decide to purchase any stock for whatever reason, or if you decide to avoid a stock for whatever reason. Again, this is for entertainment purposes, but I'm just trying to add value to any beginner investors or intermediate investors that are trying to learn the stock market and make the best decisions with their capital. Now, I'm going to do a little bit of a similar outline, a similar outlook, and a similar process. I'm going to take you through similar steps I did in the last video with Castellum CTM, with BigBear.ai as well. It's a different company, but I want to give you guys the same groundwork that I did in the last one. So first off, I do want to give you the cautionary signals and the bad news in regards to this company itself. So first and foremost, just like I mentioned in Castellum CTM, we are also into a downtrend along with the company as well. When we look at the daily time frame, even if we look at the weekly time frame chart, it would be the same thing. Let's actually take a look real quick. So if you look at the weekly, so at the very moment, no, it's not in a downtrend at the moment, but it is in a very range-bound market, and we do have a lot of look aboves and fails, and we continue to have failed breakouts to the upside. But again, another thing to take into consideration, because we do this for our growth capital, for growth stocks like these companies, we look to expand things out to longer time frames. So that's the importance, because if you look at the weekly chart, it's range bound. But if you look at the daily chart, sorry, I'm not trying to get too off topic, but just pointing it out that if you look at the daily chart, it does look a lot worse than it does in the weekly. Again, it's not the type of bullish move we're looking, but you get the idea of what it is I'm trying to say here in this specific scenario. Now, there has been lots of volatility with this stock in general. It is a very risky play because in regards to what the sentiment is with this stock, a lot of people do feel like the revenue growth is pretty slow, and they do have history of losses in quarter over quarter. There was a big hit in one of the quarters last year as well. And a lot of people do worry about putting their capital into a company like this that is very volatile, and they haven't had consistent profitability and really exponential revenue growth, especially with how hyped up the stock is. So that is one of the reasons why people do have the sentiment of this is a pretty risky play. Now, they are heavily reliant on contracts, the same as with CTM, and they do have a very narrow revenue base. So that's another reason why people are like, oh yeah, things can slow down with the government, things can slow down with the military and them getting more contracts in the future. So some people are like, this is too risky. Other people are like, let's just add in slowly just to see what happens after the dust settles and after, maybe we do get some positive news with this stock. Now, they also do have a history of diluting and, they have a history of diluting and assigning new shares issuing new shares of the company to existing shareholders, so they continue to dilute their investors, and it does also make people feel like there's a little more risk because the share price has not continued to go up. So some people kind of get a little hesitant and think, oh, the share price hasn't gone up, even though that there has been dilution in the past. I am getting a little shaky, so that's another cautionary tale to be aware of. And overall, they're just in a very competitive market with the defense market as a whole. Now, we got through the bad. Let's talk about the good news about this stock. Now, in regards to BigBear.ai specifically, from a financials perspective, they do have a very strong backlog. If you do your own due diligence and you look back to the year 2023, their backlog was reported at 168 million, and in the year 2025, it increases all the way up to the end of 2025. It was reported to be $380 million. Now, even though they do have a very narrow revenue base, they do get solid contracts. A good example was a $165 million production contract for force management solutions with the U.S. Army, and it was for $165 million for 5 years. So that obviously does help out. Now, they do have a better cash position. They have a record cash balance of about $390.8 million. And I did mention that the revenue growth is slow, but they're not. Their revenue isn't getting worse. It is growing and it is getting better year over year, but it is slow. It's not exponential growth, but it is slow. So that still is decent, and it's obviously better than losing money. Obviously making money is better than losing money, but with a stock like this, people just want to see exponential growth in revenue. Now, also another thing is they do continue to reduce their debt the same way that Castellum CTM did in the previous video that we mentioned. And overall, the consensus, again, please do your own due diligence and look to see how credible the information I'm giving you is, because you can look on tip ranks. That's where I found this specifically, that more analysts specifically are coming to the consensus that this is becoming more of a moderate buy. So that's just another thing to be able to get other investors to think, okay, maybe I should buy into the stock, just to change their psychology and the way they think about the stock. So again, not everything happens overnight, but that's just another green bullish indicator. Now, for a while, another thing that I mentioned when we do our market and stock analysis is we do look for market usage. And one thing that did attract me to the stock is they really did show real market usage, and they did show real value through the services that they provide with the airport and the face recognition scanner that they had in all of the airports. So it's not all just hypothetical, and they are legit, and they are putting out their products out there to be used. So that's obviously a green bullish sign. And they are good at forming partnerships. Some noticeable ones have been with Palantir, the NFL with the Washington Commanders, DEFCON AI, the list goes on and on. But those are the most notable ones that people will mention when they talk about partnerships with BigBear.ai. Now, again, it's going to be the same plan that I had with Castellum CTM. It's the same play. It's just there's only one minor difference. It's the fact that, yes, I'm checking for revenue growth year over year. Yes, I'm checking the net income trend. Yes, I'm checking the debt level and the backlog size. I'm taking all those things into consideration. I continue to check those. Same way with the slow process of looking for year over year, not just quarter over quarter. I do pay attention to quarterlies, but one bad quarter does not change everything for me. It's the fact that I am dollar cost averaging into this company specifically because, again, as I mentioned in the previous video, Castellum CTM is my biggest holding. And I do want to diversify my portfolio with my other stocks that I have in my Robinhood and Vanguard brokerage accounts. So I am dollar cost averaging to be able to continue to add for the long term and to diversify. That's the only difference I would say I have with this specific stock. With that being said, guys, again, happy to be here. I love doing this. I love recording these videos, and I love adding value in any way that I can. So if there's anything you guys want to ask me, feel free to ask in the comments. I'll be happy to answer back. But besides that, David with InvestQ out. Take it easy, man.